So today in this video, we are going to be breaking down the high-level summary of our edge, of our strategy for the month of December. We are going on, let's see here, the fourth month of data reviews. And I could already say, I could speak on this, that doing this exercise, collecting data on a strategy that we know very well, we've studied it, we've created this strategy to serve one purpose: to get consistent results in the market. We fine-tuned it using critical levels, moving averages, in specific entry criteria. And now we execute it over and over and over each and every single day, and we log the trades. And then at the end of the month, I create what we like to call a high-level summary, right? Where we break down each trade day by day. How did it perform? How was its win ratio? What was its ROI? How often does it work? So this is something I used to do in my old position, in my old job as a data analyst, where I would just collect radio frequency measurements day in and day out, right? And I would analyze them. And the crazy thing is, in the law of probability states that if you do something over and over, you will develop a frequency or a repeatable outcome. And the beauty of it is you learn it inside and out. It becomes a part of your subconscious. So you just execute this flawlessly, without hesitation, without reservation, and with the correct expectation. That is one of the most important concepts to trading that we must all understand, is expectation. You have to expect something, but you can't expect too much. You can't expect the trade to always go your way. You have to understand the win ratio, and you can't just hear it from me or somebody else. If you can go through and do this exercise, you develop an understanding that very few have. And that understanding is going to give you the confidence, the control, the conviction, the competence in your abilities to do what you need to do on the market. Right? So you guys know how much I love this exercise. We're going to break it down. This month only had 16 examples, in my opinion, that represented our specifications. So what are our specifications? Trading off a critical level, identifying a moving average cross, that's the 5 and the 21 EMA. Our entry criteria is a red bar or green bar ignored, right? So in this example right here, we have open print, price falls below it, we get the moving average cross, price falls below OP, comes up, tags OP, and then this red bar ignores this green bar. So this is where we would enter puts, targeting the next target, and our stop loss would be above the previous bar, above the bar that was ignored. This is significant. It is paramount that this is how you enter the market. And if you can learn to do this, you'll avoid bad setups, and you'll always predefine your risk. The number one rule of day trading, what is it? Managing capital. Right? So in this exercise, in this strategy, we are literally killing two birds with one stone. We're managing capital and we're avoiding bad trades, because you'll realize there's no green bar that's ignored until this one. And there's really no good entry until this one. So once again, we fine-tuned this strategy to fit our intentions, our goals. And this is what you need to do. And this is what, if you go to my website, click the link below, there's a page called Redefining Your Approach, and that is what this is all about. If you want to do this with your own strategy, I would start there. All right, let's dive into it. First thing I want to go over is the previous data. Month of September, 72%. Month of October, exact same metrics, 72%. Month of November, 85% win ratio on this. And then month of December, we have a 75% win ratio with 16 total trades, 4 losses, 12 winners. So once again, getting your expectations correct is so important, because after doing this exercise, we know, hey, there's going to be some losers. This makes it much easier to stop out. This makes it, and we're going to go over what the losers look like, but this helps you, brings the awareness to you that not every trade is going to be green. Not every trade is going to be a home run. This sets the precedent, so when you go into a trade, you're not just in la la land expecting a perfect green 100% trade. And what this does is helps keep you grounded, because trading is so emotional. You become extremely biased because you want to make money. You know, and if your beliefs are not correct, you may be the trader that thinks you need to make money today to be a good trader, right? You might base your value off having a green day, where me and the HPT members, we base our value off having a green month, a green year. So once again, kind of, you know, altering your beliefs to fit the system you're trying to create to obtain the goal that you actually truly desire, right? That's what we're trying to do here. So first trade right here, 12-2. You can see open print established, moving average cross. We got one to the downside before, but there was no GBI. Once again, this is why this strategy's been fine-tuned so well, because like right here, open print, moving average cross, but we're lacking that third step, right? The entry criteria, I like to call it. There's none. There's no GBI here, or RBI, right? The RBI comes in only after buyers take back open print, take the market long right here at 603.40. Our stops below 603, risking 40 cents here. And, you know, we captured a potential $1.25 move. So, once again, before we go further, what constitutes a winning trade, right? Because clarity is paramount. Is the trade must move $1 in the intended direction. So if you're going long, price must move at least $1 after your entry. That's what I like to constitute as a successful winning trade. Some people might not hold their trades for $1. Some people might hold it longer. But the examples you're going to see are examples where price, the strategy, if when just left to play out, it moved at least $1 in the intended direction. Second trade, 12-4. This was a loss. Check this out. So really choppy conditions. The cloud's not being respected. It's red. Buyers come in, almost turns green, doesn't. We get the moving average cross to the downside, right? Fake out above open print. What's that? A rejection off pre-market high right there. Green bar ignored. In the market short. And then price rallies here and then sucks back up, stomps us out. Once again, we're risking one bar here to make $1 move. Completely fine. This was a really nice one right here. What I like about it is buyers come in. Once again, we got no moving average cross in the morning, so there was no trade for me. And then we rally above PDH, previous day high. Price falls below it. Sellers show strength. Wiping buyers out there, dropping into EOD. Green bar, respecting the 9D EMA. Look at that, very beautiful. Price rallies down, wipes out the bottom, in short, stop above, glorious move. This was a great day right here, and it was a little different because it wasn't off open print. And once again, this is something I want to clarify. As long as the trade is taking place before noon, right, that's one of our specifications, and it's off a critical level, all the principles still apply. So it doesn't need to be off OP. Obviously, I love trading open print. Open print makes me a lot of money, and I've gotten really confident while trading the open. But once again, your expectations need to be correct. You're not always going to get the move you want or are looking for. On the contrary, you're probably going to get the move you least expect. So don't be so short-minded. Allow price to still play out. Green bar ignored at PDH, moving average cross in the market short. Let's find a loser here. Okay, this was a great one. Actually, this was a great day because our strategy presented itself twice. Once again, and the reason why I love this strategy is in the famous words of my boy Todd from Louisiana, you're risking one bar to make 2 bars, 3 bars, 4 bars. As long as you're always risking 1 bar, it's just a numbers game. right? You got a 75% win ratio. When you lose, you're losing 1 bar. When you win, you're making 2 bars, 3 bars, 4 bars, 5 bars. That, my friend, is a very simple way to approach risk reward, risk management, and consistency. Look at it in that perspective, and you have yourself a successful equation. So this was a day where we took a loss. Open print, sell off, price comes back above it, buyers show strength, rallies above OP, red bar, ignored in the market long, stop below the red bar, we get stomped out. Bam. Once again, risking 40 cents here. And then we get stomped out, but we are still, price action still reacting to open print, and in a way that provides us beautiful short criteria. Once again, the law of the 50-50 perspective. I'll show you it real quick. Hold on. Let's go here, Discord. This is going to be a great resource for all HPT members here. I'm creating, what is it right here? Section up here, trading principles, market principles, biblical principles, right? Because principles govern the universe. So over here in the law of the 50-50 perspective, this principle suggests whomever, buyers or sellers, defends the open with structure and moving average dominance has a higher probability of controlling price into the next market imbalance, right? So if buyers can't hold, or in this case, if sellers can't hold, buyers take it, right? So based off that perspective, in that principle, if buyers can't hold above OP, we fall below it, we get our criteria, we're in the market short, bam. 50-50 perspective, executed beautifully. Best part, on our long, we risked 1 bar. On our short, we made 1, 2, 3, 4, 5, 6 bars, 7 bars, right? So once again, law of risk management. Here's a loss right here, and you know, was this the edge? Was it the strategy? I would love your opinion. We have open print. We have moving average cross that took place way back here. the reason why, looking back, hindsight's obviously always 20/20, but the reason why I believe this trade wasn't valid was the erratic price action we were getting, right? We were getting very unbalanced price action. And what I mean by that is, look at the extensions from the moving averages, right? Like down here, super extended, we get the snapback. Price rallies up quick, we get the snapback into the moving average. So once again, this is going to address the whole know your environment. Know which conditions are beneficial for you. Do you want to go swimming in during a tsunami? Probably not a good idea, right? Because the conditions are erratic and violent, all over the place, unbalanced, unpredictable. Where same as in the market, when you're getting a lot of, erratic movement in price, it's very violent, it's all over the place. Yes, that could, provide great opportunity, but at the same time, maybe not always. So, know your environment. What was this? 12. Yeah, this was a very, there was a lot of news been going on, and fundamentals that added to that volume. But, I identified buyers off OP. I wanted to at least put on risk. Didn't go our way, so be it. 12-13. This was a phenomenal play right here, and you'll see we actually, price makes a beautiful move right here off the market open, and then price comes in. That's actually our criteria right there off the market open. I just didn't trade it, but we got a beautiful red bar ignored off open print, moving average cross, and then price rallies into PDH, comes back down below open print, rips back into it, green bar ignored. That's a short play, baby. Beautiful move right there. 12-16, this was a loss right here, very similar to the one that we showed before. But this is a trade I have to take, right? And once again, you're gonna get losing trades. It's like, here's me over here trying to justify. Like, it's so funny how our brains are striving to validate everything, where sometimes there's no validation. This is our edge. Look at this. Critical level, moving average cross, red bar, ignored. I have to take that long. If I don't take that long, I'm breaking character by being a bitch. That is my strategy. That's my criteria. I'm a fraud if I don't enter in that trade. Don't care. It went against me, so be it. Risk 1 bar. You don't need to validate. 12.18, beautiful trade right here. Beautiful trade, open print. Price rallies. What is this? About $1.50 before giving me a red bar to be ignored. Didn't matter. My target was valid. Got my moving average cross. We identified strength going into the 50 EMA here. So that, my friend, is a long play. I don't care if it's already moved $1.50. I'm not going to assume just because it's moved $1.50, it's got to pull back. Stop assuming, right? Follow your moving averages. Main reason why I long this is look at the relationship here on the 9. Healthy, baby. She's super healthy. No extensions, right? Where's that one day we were just... Look at this extension right here. Look at this massive extension from price and the moving average. That's what we call erratic, right? We don't want that. We want this. Nice, healthy, hugging, balanced, one directional. That's what we want to trade. Oh, this day was beautiful. It took a lot of acceptance though, right? Open print, failed buyers, moving average cross. So every time I'm getting a cross at open print or any critical level, bam, flag goes up, ding, 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 alarms going off in my mind going, all right, Josh, where is your entry criteria? I'm constantly writing it in the Discord. I go, oh, this looks great. Waiting on entry criteria. I will never, I repeat, never enter a trade until my entry criteria is there. If it ain't there, there's no trade. What's your entry criteria? GBI, baby. RBI. Beautiful. Falls below OP. And it's because I need to, A, identify dominance, meaning who is ignoring the other, right? If sellers are in control, they will ignore any buyers present. If buyers are in control, they will ignore any sellers present. I need to see that. A, to identify dominance, and B, to identify risk. Risk management is the key to becoming a successful trader. And I will not just enter a trade based on a whim and throw in a hard stop. That makes no sense. I need to identify risk. I need the RBI. I need the GBI. Do I miss out on trades? Yeah. But those trades I'm missing out on, I do not even want in my journal. Simple as that. Once again, fine-tuned strategy to accomplish what I'm intending to accomplish. Sells off, pulls back, never breaks the initial entry, and got a glorious move there. This was a beautiful move. Don't let looks deceive you either. This was literally a $3 move to the downside. And anybody that's currently trading in these market conditions, you guys know the price action is insanely erratic. It made 150% off this move. I remember it cleared very vividly. And once again, very simple. Look at this. Price rallies above OP, failed buyers. So once again, ding, law of the 50-50 perspective. Whoever shows dominance via market structure and moving averages, I'm looking to trade with. They hold a 88% chance of moving price to the next market imbalance, right? So once again, therefore, if that happens, I must trade in that direction. And that's exactly what we did right here. This one, and literally, that was the morning. Here was the evening. Still before noon, too. That's what I love. And the reason why I want it before noon is I know a lot of traders have other things going on. So I'm focusing on building and developing a strategy that addresses the market open. Beautiful. Short play. Gets extended from the 9. Sucks back up into it. Once again, healthy relationship right here. You guys know it. You probably can't stand how much I say it, but healthy relationship. Moving average cross, healthy relationship. Red bar, ignored. In long, I don't care how uncomfortable it feels. When I get that red bar ignored, that's telling me something. Beautiful trade right there. This was a beautiful one right there too. This was Christmas Eve. This is a banger, banging trade right there. I think it was, no, 12/26. This was Christmas. Okay, long. And then last trade that we took yesterday, bit different, but look, moving average cross, open print, nasty chop in the morning. Look at that chop. We stayed away from all that chop. Why did we stay away from that chop? Because we understand how our moving averages work. If you can learn to understand extension, healthiness, unhealthiness, you will not murder your capital, your trading account, on shit like this. If you can learn and understand, and you're going to have to study, you're going to have to put work into it, but if you can learn what a good, healthy relationship looks like, you will avoid trading this bullshit. I will never trade that bullshit. In the Discord, I'm going, oh, yeah, nope, can't. Sideline until it develops. Sideline until they work on the relationship issues, right? I will not enter a trade until that smooths out. And then once it starts hugging, I literally entered short right here, stop above that green. Price rallies into the cloud, rejects, beautiful sell-off. So this month, 75% win ratio. I hope you guys are starting to notice a pattern here. The more data you collect, right? Data is only valuable if it's consistent data, meaning you have to be using the same input. Your stimulus will lead to a response. That stimulus, to get a consistent response, which would be consistent profitability, you need a consistent input, a consistent stimulus, a consistent strategy. And you need to be able to implement it over and over and over, right? You need to be a little flexible, right? Obviously, no two trades will ever be the same, but the principles do remain the same. Principle 1, critical level. Principle 2, moving averages, market structure. Principle 3, RBI, GBI, baby. Another month down, we're going into 2025, and I am extremely excited. HPT, me and all my members, we are ready. We've never been more focused. All of our lives have been leading to this one moment, and this is the year where everything's going to change for us. I love all of you. If you guys are looking for a good team, click the links below, get involved, reach out to me. I'm here to help and serve everybody. I love all of you guys. God bless, and let's crush this market.